You can't help but notice this growing unease around the world lately. And a lot of it seems to circle back to China, doesn't it? Their economy, what they're doing geopolitically.
Absolutely. It feels like there's a shift happening. Trade patterns, strategic moves. It's definitely got everyone's attention.
Right. And that's exactly what we're digging into today. We've pulled together some really interesting YouTube transcripts. You get these on-the-ground perspectives, but also expert takes on the bigger picture.
Yeah, a mix of voices.
And our mission, really, is to sift through it all, get past the noise, and understand what's really going on with China's economy right now, why it's happening, and, what it means for the rest of us.
Okay, let's get into it.
So one of the first things that jumps out from the sources is this trend, and it seems to be picking up steam of global companies moving factories out of China.
It really does. And what's striking isn't just that it's happening, but the scale of it. It's not isolated incidents. We're seeing reports about shutdowns in a whole bunch of cities.
Yeah, Tianjin keeps popping up, right? Like a circuit board plant in Shanghai, I think, a biscuit packaging place in Winging.
Electronics in Dongyi, another one in Tongyi, a switch factory in Wing. The list goes on.
Exactly. And it's not just Tianjin. The sources mention Beijing, Shandong, Jiangsu, Nantong, even Shanghai. 4 cosmetics factories there apparently shut down, most just gone completely.
And that detail about the one remaining cosmetics factory in Shanghai hiring older women, apparently under pretty tough conditions, that really paints a picture of how tight the job market is getting there.
It really does. It says a lot about the pressure businesses are under.
For sure.
So, okay, why is this happening? What's driving this big shift? It seems like a few things are hitting at once.
Definitely seems that way. Rising labor costs are a huge piece of the puzzle.
Yeah, the numbers are pretty dramatic. The
Y-
sources say the average factory wage went from maybe $150 a month back in 2005
Right.
to potentially over $1,200 by 2025. That's a massive jump.
It really is. And, while that wage growth helps lift millions out of poverty, which is obviously a good thing,
Of course.
it's also made China much more expensive for manufacturing. Plus, you have changing attitudes. Maybe younger folks aren't as keen on factory work, so it's kind of a double hit.
And then you put those Chinese wages next to, say, Vietnam at around $300 a month, or India at $250.
Well, the math becomes pretty simple for companies looking at their bottom line, doesn't it? The incentive to live elsewhere is strong.
No kidding. Plus, you've got the whole U.S.-China trade war situation, those tariffs. Some are apparently incredibly high, like 245%.
Oof. Yeah, tariffs like that fundamentally change the economics of exporting from China to the U.S.
And then COVID. That really showed everyone how risky it can be to have your entire supply chain concentrated in one place.
Exactly. The pandemic was a massive wake-up call. Companies realized they needed more resilience, more options. It really accelerated the search for diversification.
We even saw that example with Apple moving a big chunk of iPhone production to India. What was it, like 20% now? Worth something like $22 billion.
That's a huge signal.
Yeah.
Apple moving production like that shows real confidence in India as a viable alternative hub.
And it's not just costs, right? The sources mentioned the younger generation in China may be looking for different kinds of jobs, not necessarily factory work.
Yeah, that demographic shift plays a role too. If you're facing labor shortages in manufacturing, that also pushes costs up and makes companies think twice.
So it sounds like a lot of businesses are going for this.
Hmm.
What do the sources call it? China plus one strategy.
Mm-hmm. That's the idea.
Basically, keep a presence in China, but also set up operations in at least one other country, sort of hedging their bets.
Precisely. It's about managing risk, gaining flexibility. And related to that, we're seeing more talk about nearshoring, moving production closer to key markets, and reshoring, bringing it back home.
Right, bringing factories back to the U.S. or Europe. The sources suggest that's actually starting to happen more.
Yeah, there seems to be some real momentum behind those initiatives now.
Okay, let's zoom in on those tariffs and the trade war fallout. It sounds like Chinese manufacturers are really feeling the pain.
Oh, definitely. That story about the textile factory owner in Shaoxing facing a 145% tariff, suddenly losing money on a shipment to the U.S. that used to be profitable.
Yeah, that makes it very real, especially for businesses running on tight margins anyway.
And then you hear that American companies are apparently canceling orders by the millions.
That's got to send shockwaves through the system.
It does. And the way many factories operate kind of magnifies the problem. They often need those initial deposits from buyers to even start production, maybe get loans.
Right, to buy materials and pay workers up front.
Exactly. They expect the final payment when the goods ship. So if a huge order gets canceled midstream,
They're stuck. Stuck with goods they can't sell, loans they can't repay.
And often workers they can't pay. It can quickly spiral into bankruptcy.
Goldman Sachs apparently estimated, what was it, potentially 20 million job losses in China just from export declines.
That's the number floating around. A staggering figure, really. The social impact could be immense.
And it's not like China can just easily find other customers to replace the entire U.S. market overnight, right?
Not easily at all. The U.S. is such a massive consumer market. Rerouting all that production and finding equivalent demand elsewhere is a huge, huge challenge. It takes time, investment. It's not a quick fix.
The sources also brought up this longer history, allegations of unfair trade practices by China. Things like weak IP protection, maybe mercantilism.
Yeah, those are long-standing points of friction. Accusations about prioritizing exports, subsidizing industries, making it hard for foreign companies to compete fairly within China. Those complaints have definitely fueled some of the trade tensions we see now.
Okay, so all of this, the factory shifts, the tariffs, the canceled orders, it seems to be adding up to some serious economic headwinds inside China, and maybe even social unease.
Well, when you see reports that China's actually in a deflationary spiral, both consumer prices and producer prices falling for months, that's a worrying sign.
Right. Deflation is generally not good news for an economy.
No, it can signal falling demand, make debt burdens heavier. Combine that with the debt issues, particularly in the property sector, and falling property prices. It paints a picture of real economic struggle.
It's interesting how the sources contrast the official messaging from the CCP, emphasizing strength and progress, with the reality people might be seeing on the ground, like factories closing.
That disconnect can definitely create tension. The Financial Times reporting slower production because of U.S. tariffs, merchants feeling anxious, deliveries getting halted.
Yeah, that story about the plastics factory worker in Fujian, export orders just vanishing overnight, that really hits home.
It does, and it's not just workers and businesses feeling it. If economic activity slows down, CCP tax revenues likely take a hit too.
Which impacts the government's own spending power.
Exactly. And then think about the job market. Sources mention something like 12 million new graduates trying to find work this year.
In a shrinking market, potentially. That example of the liberal arts grad applying for 8,000 jobs and getting nothing.
It's hard to even fathom that level of competition, that lack of opportunity. It's a recipe for frustration, especially for young, educated people.
And you mentioned the social credit system earlier.
Yeah.
How does that factor in? Does it make it harder for people to, complain or protest?
It certainly raises concerns about chilling dissent. When your social score can affect your life in so many ways, you might think twice about speaking out. That said, the sources did mention wage disputes and some worker protests happening, mainly over unpaid wages.
Right, which makes sense given the factory closures and bankruptcies we talked about. People need to get paid.
It points to those economic pressures bubbling up despite the controls.
Okay, let's pin out a bit. What about the bigger picture, the geopolitical side of things? China's manufacturing power has been a huge source of its global influence, right? Especially somewhere like Africa.
Oh, absolutely. Being the world's factory gave China enormous leverage. It could offer African nations affordable goods, invest heavily in infrastructure, often in exchange for resources, and build strong political ties.
Yeah, the sources mentioned African countries owe China something like $150 billion. That's a lot of influence.
It is. China became a major economic partner, sometimes seen as playing a stabilizing role, offering an alternative to Western influence.
But if that manufacturing engine starts to sputter, does that influence start to fade? We also hear concerns about China being more assertive to Taiwan, the South China Sea.
That's the big question, isn't it? Can China maintain its global ambitions and project power in the same way if its economic foundation weakens? Its role in groups like BRICS, its influence in international bodies, a sustained economic downturn could impact all of that.
And while China faces these headwinds, other countries seem poised to pick up some of the slack. Yeah, Vietnam, India, Mexico, Thailand were all mentioned.
Definitely. We're seeing concrete examples like that foreign investment pouring into Vietnam, Foxconn assembling iPhones in Brazil now, Sony and Sharp moving production to Thailand.
Thailand seems well-positioned with its experience in car parts and electronics.
Exactly. These countries see an opportunity to capture some of that manufacturing business that's relocating.
But it's not just about moving jobs around, is it? Automation, AI, that's changing manufacturing everywhere.
That's a crucial point. Automation is reshaping the factory floor. It might reduce the importance of low-cost labor over time. China knows this. Their whole Made in China 2025 plan is about moving up the value chain, focusing on high-tech manufacturing.
And we should probably also mention the environmental side. China's faced huge environmental challenges from all that rapid industrialization. Stricter regulations could also be pushing some industries out, maybe.
It's definitely a factor. The cost of complying with environmental rules adds up. For some industries, moving to a place with perhaps less stringent enforcement might seem appealing, although that's changing globally too.
Okay, one area where China still seems to hold a lot of cards is rare earth minerals. That came up quite a bit.
Yes, this is critical. China doesn't just mine a lot of rare earths. Crucially, it dominates the processing of them. And these aren't just niche materials. They're essential for everything from smartphones and EVs to advanced defense technology.
So when China puts export controls on things like gallium, germanium, and some specific rare earths, that sends ripples everywhere. Especially defense, right? Fighter jets, missiles.
Absolutely. The U.S. military relies on these materials. So do industries making semiconductors, electric vehicle motors, powerful magnets. These controls could mean higher prices, production delays, a real strategic vulnerability.
So what's the U.S. doing about it? Trying to mine more domestically? I think Mountain Pass was mentioned, maybe other sites.
Yes, there's a push to revive domestic mining, like at Mountain Pass, and explore new sources in places like Montana and Idaho. Plus, looking at recycling, developing alternative technologies that need fewer rare earths, and partnering with allies like Australia.
But mining takes time, right? Permits, environmental reviews.
It's a very slow process, which is part of why China got so far ahead they made it a strategic priority decades ago, invested heavily, and perhaps had different environmental standards back then.
That history of the Mountain Pass mine closing back in the day really highlights that shift.
It does. China stepped into that gap. Now you see Australia, Canada, Brazil ramping up their own production, trying to diversify the global supply chain. People remember when China cut off exports to Japan back in 2010, lessons were learned.
Speaking of asserting leverage, the South China Sea also got a mention, just as another example of China being more, well, assertive on the world stage.
Right. The island building, the clashes with Philippine vessels. It's about China pushing its territorial claims in a really strategic waterway. Despite international rulings against those claims, the tension remains high, with the U.S. and allies pushing back.
And just quickly, to round out the economic picture, the sources touched on problems in the housing market too. Mortgage boycotts.
Yeah, briefly. The property crash, those infamous unfinished apartment buildings, people refusing to pay mortgages on homes that might never be completed.
Yeah.
It's another layer of economic instability with potential risks for the banks.
Okay, last piece here. How is the Chinese Communist Party, the CCP, responding to all this?
Yeah.
Especially the propaganda side.
Well, the sources point to a pattern of denial and narrative control, denying talks with the U.S. when they seem to be happening, playing up economic problems in the West while insisting everything's fine in China.
Downplaying bad news, basically.
Or misrepresenting data. There's a history there. And they invest heavily in this, reportedly over $30 billion a year on propaganda and censorship, using state media, online armies, blocking critical information.
It's like the efforts to erase discussions about Tiananmen Square.
That's a prime example of their control capabilities. And then you see actions like banning Boeing, potentially hurting their own airlines, needing parts and planes seemingly as retaliation.
Even though, ironically, Xi Jinping apparently flies on a Boeing.
That's what the sources suggest. It sort of highlights that tension between projecting strength and dealing with practical needs.
So pulling it all together, it really sounds like China is facing this complex knot of problems right now. Manufacturing leaving, the trade war biting, the economy slowing down, geopolitical frictions, social pressures.
They're all interconnected, and none of it happens in a vacuum. These issues have real-world impacts way beyond China's borders for global companies, for consumers like you listening, for international relations.
Absolutely. So maybe a final thought for you, the listener, to chew on. When you look at all these intertwined challenges, what do you think is the single biggest hurdle China needs to clear to get its economy back on a stable footing and hold on to its global influence? And looking ahead, what kind of long-term shifts in global power might we actually be seeing unfold here?
Lots to think about. We definitely encourage you to explore the sources further if this sparked your interest.